Welcome back to my channel. Happy Halloween. If you're not celebrating Halloween today or yesterday or this week, happy Halloween still. Or do I say happy Yuletide period? Happy compliments of the season. So my reason for making this video today, allow me to get straight into it. A couple of months ago, about 3 months ago or so, someone offered that they could get me a car, a Toyota CRH hybrid one. The retail price is about 25 to 27,000 euros, but they said they could get it for me for 15,000. Now the plan in my head was I would borrow 15,000 from the bank, buy the car, and then sell it for 27 or 25, and then invest the margin or the difference between the two. But it's been a few months, and eventually it happened that it's a no-show. Meanwhile, I already got the loan from the bank, and I was waiting. And it's a no-show. Couldn't get me the car. And then instead of returning the money to the bank, I was told it might affect my credit rating. Now, I don't know how true that is, but someone advised me that it might affect my credit rating. So instead of returning it to the bank, I thought to myself, if I'm going to borrow money to buy a car, obviously in this case, there's going to be the intention was to have profit on top of it. My wife wanted me to keep the car, but there's no way I'm going to buy a 27 or 25,000 euro car and start driving about with it. Whereas there's nothing wrong with my own car. So I said I was going to use that money and invest in stocks instead, and then continue to pay it off as if I used that money to buy a car. So the idea is you borrow money, you use it to buy investments, but in your head, it's like you borrow money, but you used it to buy a car, and now you have to pay off the car. So the intention is I buy the stocks, and the returns from the stocks is paying for the car, plus whatever I need to pay off from my pocket as if I borrowed the money from the car anyway. If I borrowed the money for the car anyway, I'm going to add it to the back to the repayment so that I can clear it off faster. And the way I have it set up now is by May next year or so, it should be cleared. Uh, that investment has doubled my position in Russell 2000. So instead of selling one contract every 2 days, now I sell two contracts every 2 days, which is which is has really made me happy. The reason I'm sharing this with you is a few years ago, I thought to myself, like many people would say, never borrow money to invest in stocks because stocks is pretty volatile. It can go up and it can go down. What if you borrow the money and as soon as you invest it in the stocks, it starts declining? But you see, my strategy, here's what I do. My strategy, I'm not heavily invested in any single stock. My main investments are in indexes. For now, it's Russell 2000. As my portfolio grows, even if I move out of Russell 2000, which I doubt I will do, it will be maybe S&P 500, which is SPY, or the Dow, or any of those. And when I'm diversifying my portfolio, I'll look into every other thing I look into will be an ETF as well. So even if it's real estate or properties that I'm going into, it will be maybe IYR or one of those ETFs that owns REITs or things like that. So not to not to digress too much. So I have double the position, double the contract on. So I now sell two contracts on Russell 2000, and I have an outstanding bill or personal loan to the bank that I have to pay back. And I thought to myself, instead of borrowing like most people would do, borrow money to buy a car that is depreciating in value, why don't I use the money to buy assets or stocks that even though it declines and appreciates in value, my cash flow does not stop. So what most people do is they buy stocks and they hope and pray that it goes up. In my situation, I know it's always going to go up because I'm not buying individual stocks. I'm buying indexes, and over time, indexes have always gone up since the stock market since index was invented. It's always been going up. So I know that it might come down now because of what's happening in the market, but in the long term, it's going to go back up. And even while it's coming down, I'm still cash flowing every 2 days. So today is Wednesday. Two of my contracts are going to expire today, and I'll be selling another two contracts to expire on Friday. So that's what I do. I sell contracts to expire Wednesday, expire Monday, expire Wednesdays, and expire Fridays. Every 2 days, I'm getting paid. And I'm using that money plus the money from my pocket, like I'm paying off the, I'm going to be paying 2 or 3 times the amount I'm supposed to pay on a regular basis from my pocket, plus what is coming from the stocks, so that I can clear it up. Now it's a 5-year loan, but I intend to clear it in 5 months. And if things go to plan, during the summer, I won't be investing in the summer. I'll take a leave, use it as a regroup. There's a song by, is it, I can't remember, I think it's Cassidy or whoever. I say, I grind all summer, hustle all winter, or something like that. In my case, it's, I'm going to grind and hustle all winter and then shine in the summer. So I'll take a chill out in the summer, July and August, and then I come back, resume to normal duty again in September. And that's what I was hoping to share with you guys today. So instead of borrowing money to buy depreciating assets, I borrowed money to buy appreciating assets or cash flowing assets. And if it goes well, I might be addicted to this. Maybe September next year, I might get another personal loan and repeat the same thing and continue to repeat the cycle until it doesn't work anymore or something. First goal is to get to the 100,000 mark. Once I get to that point, then maybe I have a change in strategy. But for now, this is what it is. And hopefully I'll see you again in my next video.